Abdullah, thank you so much for your time. Thank you so much. I'm very happy to see you today. I'm very excited to see you today.
It's my pleasure.
Thank you so much. Thank
Yeah,
you so
thanks for
much.
having
We know you're a very successful businessman. You're very famous in the market, and your company is also very famous in the market. And I think literally everyone who knows, who works in the real estate industry, especially in brokerage, they know and they have heard Driven. They heard, and everyone knows what is Driven. So now, Abdullah, we have a question.
I'm hoping you are right, but thank you.
Yes, I do. Actually, today morning I was at one training. I said, I have to run now, guys. They said, where are you going? I said, I have the talk with Mr. Abdullah from Driven. They said, Driven. Okay, perfect. Great. So everyone knows Driven. This is feedback from the morning.
Yeah, I hope they're online with us today then.
They asked to share the link. I said it's in my status. You can get them.
Perfect.
Okay, Abdullah, we have questions, two categories questions. One, which we're asking from DREI, DLD, and other questions which the attendees, they will be asking me. Some of the questions I got them in LinkedIn and Facebook. I told them, no, you will have to send me in private during the session so I can ask Abdullah and you will hear immediate the answer rather than rewatching, replaying it, or reading it, the printed version of this. Okay, Abdullah, what do you think now? There is a lot of talk about this COVID-19 affecting the real estate. What do you think? What's your opinion on current situation in the real estate market?
Real estate, sure. Real estate, again, it is an opinion, but real estate in general it's as an asset class, it always lags in terms of performance. So there are leading indicators and there are lagging indicators. Leading indicators of the sentiment are things like the stock market, bond markets, commodities, etc. These are leading indicators. You can feel the sentiment of the markets daily. The stock markets move every day, every hour, every minute. So you can see what the sentiment of the market looks like, on a daily basis. Because transactions happen on the spot, them, it's public to everyone. There's wisdom of the crowd. Millions of people transact on these platforms. So with these kind of asset classes, as they're going up, they lead you to believe that the sentiment is great and it's up, and it's a leading indicator to what's happening around the market. Now with real estate, because transactions, first of all, are more difficult to happen, there's especially in these times where there's a wide bid-ask spread. Today, people are asking, I want to get a bargain because I feel that I deserve a bargain. And sellers are, maybe reluctant to sell when they're seeing that, well, stock markets are up, bond markets are up, things are moving back, the sentiment is coming back quite quickly. So why should I take a big hit now? So that results in a big bid-ask spread that would normalize over time. Normally it takes 3 to 6 months to normalize to get to a new benchmark or a new equilibrium of price and demand and establish a new market value. Mm-hmm. Having said all of that, I think with the next few months, we will know how the market reacts. Now, we are already sitting at multi-year lows in real estate as an asset class in Dubai, in particular. We're already seeing the loan to value with the central bank new measures and stimulus to stimulate the market, pushing LTVs upwards of 80%. Interest rates are at all-time lows. So all of these factors combined, with real estate down, interest rates down, and LTV higher, they should encourage spur more buying activity and more demand into the real estate sector. So with that in mind, and with the sentiment being positive, I'm positive about the future of the real estate market.
A very quick question. It came just now in my mind. Stocks, real estate, or gold? Where would you invest? If you would have been out of real estate.
It doesn't have to be right, but me, I understand real estate a lot more. Gold, definitely not, because...
Let's imagine you don't work in real estate. You don't work in the real estate. Where?
So even, look, I worked in banking before. So my whole experience is actually in banking and trading equities and bonds and derivatives. So I understand equities just as much as real estate. With gold, I personally don't invest in something that does not generate cash flow. So I like to ensure that there is a return on whatever I put money in. So with that in mind, real estate, I understand it a little bit more. Simply with real estate, the beautiful thing about it is that you control your own destiny. If you invest in stocks, let's say you buy Unilever or Procter & Gamble or Coca-Cola, and this year Coca-Cola decides that they won't pay dividends because of COVID-19. That's not your decision as a shareholder. You only own a single share. But due to COVID-19, if I want to reduce my rent, hike my rent, not rent my apartment, live in my apartment, that's my decision. So I control my destiny with real estate.
Abdullah, this is also can be a very good pitch for the brokers when they speak to clients who will tell, no, I will rather buy shares. So this is what you have said now. It's really great to use in the sales,
especially now,
brokers.
especially in this market.
Especially now, correct.
Yeah.
Abdullah, question.
Sure.
Now, what do you think? There are some companies that are very strong in off-plan, and some companies are very strong in secondary.
Mm-hmm.
Okay, so what do you think? Which market is it now? Is it primary or secondary market? To sell, not to buy, to sell.
Look, I believe that there is an opportunity in every market. So, the primary market is now trying to compete with the secondary market and vice versa. And that's where we can add value as brokers to the market. And that's where we can advise the likes of developers on what they should do to compete with the secondary market, and also talk to clients and tell them, look at what developers are doing to compete. So I think if companies have enough depth in their organization to offer both in a very strong fashion, this is a recipe for success. I think you need to understand the primary market very, very well. You need to understand what's on the market in order to sell secondary, because the way you're going to pitch secondary to your clients is that by knowing exactly what the primary market is offering. Because now the primary market, there are deals where you can buy ready properties with post handover, with all kinds of incentives, etc. And the same token in the secondary market, if you want to transact, you want to convince your seller to sell, you need to tell him what's out there. On the developer side, you need to tell the developers that, look, this property that you're selling at 4 million is trading in the market for 3 million. So even if you want to sell it for 4 million, make sure that you create that at least 1 million in value for the client, whether it's in waivers and service charge waivers and 5-10 year payment plans, in order for me to convince my buyer to go with your product rather than the secondary market.
For example, Abdullah, let's imagine I'm the new broker who just arrived in Dubai, who just passed the interview. And what do you think? I'm just a new broker. Should I focus on secondary or primary? Your advice.
Today, I believe that you should understand secondary a lot more than off-plan. Primary. There's two reasons for this. Firstly, with off-plan, the times of launches every week and every month, and that type of off-plan is gone. We've seen that since September, October, the mega developers, whether it's A'mar, Miras, Dubai Holding, Nakhil, they've virtually stopped new builds and new projects and new master plans. All you see is continuing to sell their existing master plans or focusing on existing inventory that they have, whether it's ready or close to completion.
Correct.
So and I think if you want to be strong, if you want to be competitive in today's market, you need to understand what developers have in ready inventory vis-a-vis what's on the market in the secondary market. And you should, I think, focusing on the secondary market today is going to reap more fruits over time.
Mm-hmm. Thank you, Abdullah. So, for example, let's imagine I'm now investor who just arrived in Dubai. What do you think? I should buy primary or secondary? Your advice. I'm the investor.
Look, I wouldn't. I'm one of those people that would not be biased to one versus the other. I'm more opportunistic. So first, I would understand my clients' needs, my investors' needs. I would say, there are opportunities in the primary market. There is that general belief that primary market is more expensive, it's more costly, but that's really not true. I mean, if you go now and you calculate the net present value of a property that's sold on a 10-year payment plan and with 4% waivers and 5-year service charge waivers and all kinds of incentives that developers, if you calculate the net present value of that deal today, it's similar or in some cases even cheaper than what's on the secondary market. So if that opportunity exists, then I'll go with the primary market. However, if there's, if I'll look at it, I'll do a textbook approach and see what's better value for money for me. If I pay 1 million more for a primary, but I'm getting 1.5 million of value over a longer period of time, I'll go with the primary, and I'll go with the secondary if other matters persist. Today, the reason I think there's a lot more opportunity in the secondary in general, as the LTV is at multi-year highs, interest rates at multi-year lows, so you can negotiate well with banks and with sellers to get the right deal with the right package for you. And it's more and more difficult for developers to compete, but some developers are competing.
Correct. Thank you, Abdullah. Now, for example, let's say there are different tenants and landlords. Several people, they approached me. Some of them, they were landlords. They were saying tenants are not paying, and what can I do? I'm not in UAE. Now, what do you think? There is now a certain difficult situation between tenants and landlords in this COVID-19. What would you advise? What would you advise to tenants, and what would you advise to landlords?
Tenants, it's certainly the best time if you haven't started negotiating with your landlord, either some sort of relief or an extension of a deferral of your rent. This is the time to do it, because this is the most difficult time for many employees and employers. A lot of people are unfortunately losing jobs, and that will trigger a demand shock in the market, and that's not, that's for generally products and services, and real estate is the most expensive kind of a decision that anyone would make, when they rent a property. So I think as a tenant, you should start negotiating either a deferral or relief on your on a period of time, whether it's 1, 2, or 3 months, depending on your circumstances. Landlords, on the basis of that, they need to negotiate deferrals with their banks on their mortgage payments. And I understand that the UAE government has done a remarkable job in pushing the banks and funding the banks and providing enough liquidity for them to be able to offer owners of properties extensions of payment or deferral on payments of mortgages. So generally, the cycle is could work economically. The fundamentals will persist. If you look at tenants not paying, at the same, it's not like, well, the landlord has to pay the bank, and if he doesn't get paid, the bank doesn't get paid. No, it's a matter of if they're all being in that ecosystem being reasonable and understanding, you will have things will fall into place from an economy perspective.
Thank you so much, Abdullah. For example, now let's imagine we know that literally every company got affected with this COVID-19. Since we're talking real estate, what do you think, what brokers and other employees who are working in the real estate companies should be doing? Your advice for current time in COVID.
Yeah, I mean, look, what I think was very was managed carefully here is you need to create, first of all, depth in your organization. So you need to ensure that there is no single source of income that pays 80% of your bills. It needs to be very diversified. So if you're involved in an off-plan and secondary, and then if you have a commercial arm, you have a property management arm, you have a leasing arm, that creates depth in your organization. You need to also be in different communities that where you are strong in, and that would create a diversified kind of income streams, and that would sustain you in times of difficulty. Because if you're relying on one source of income, and that's, let's say, off plan in a down market, and then nobody's buying off plan, then you really have to struggle more, or you have to take on more. In terms of obviously from an organizational perspective, you have to everyone's duty as a manager or CEO of any company, their duty to their shareholders or their stakeholders and their vendors is to ensure that the company stays afloat and with strong cash flows that can be that are sustainable. And on that basis, obviously, anyone in the organization would understand if there are temporary cuts or measures that would trigger a stronger kind of platform over a shorter period of time. It's kind of getting out of the woods together and quickly, as quickly as possible. While during these times, it's very, very important that you take care of everyone around you in terms of ensuring that you personally, from a management perspective, negotiate their rents with their landlords, you negotiate their lifestyles, you help them with a pool that would be available for extreme cases. So these obviously are extraordinary times and require extraordinary measures. So you need to come up. You have a duty to your vendors, your stakeholders, and your shareholders to ensure that you stay financially strong, your balance sheet is healthy for a long period of time. And these are the two things I advise. From a revenue perspective, make sure that you have depth. From a costs and expenses perspective, you need to do some temporary measures that while preserving the interests of your people.
Perfect. Abdullah, but what about brokers? Let's say the brokers who are working now, what you can say, a few words to them? Real estate brokers.
Today, I think you need to work twice as hard to get the same revenue that you would have received last December, right? And that's the reality of things. My advice to brokers is spend double the time. We're all spending double or triple or quadruple the time to actually deliver results and take up market share in this environment. And I can see actually, and what at least internally, we see some new names rise in this market. We have regulars that normally bring in the big bucks. We have there is that 20-80 rule where 20% of your people bring in 80% of your business. That 20%, it's nice to see it changing every quarter, every couple of quarters. So you see new names kind of rising to these challenges. And it's no secret. You do more, you deliver more, you have more listings, you have more contacts, you'll get more leads, and your funnel your pipeline funnel will expand, and you'll just do more business. And it's a very simple formula that just works. And so my advice is if you want to sustain the same lifestyle, you need to work twice as hard. If you want to sustain a better lifestyle, you need to work 3 or 4 times as hard.
Abdullah, what do you think about listings? A good question. Some brokers, I see them, they're having 1, 2, sometimes 5, sometimes 10 listings. What is a good number of listings? What do you think?
I think it's really more of a matter of specialty, right? Because if you're specialized in a community that only has 10 listings and you have 10 listings, then you're a fantastic agent. For example, if we go to a small community like Bulgari residences, for example, in Jumeirah.
Okay.
If you're in Bulgari and all of Bulgari is, let's say, 120 units in the entire community in all 6 buildings, and only 10 people want to sell, and you have 10 listings in this community, then you are a perfect agent. You're not just fantastic. You are, you've done an amazing job. So it's really about where you are and what your competition is. If you're in an area like Dubai Hills, where there are maybe hundreds of listings out there, and you have 10 listings, you're not doing great. You should be at the 40-50 mark in an area that has 100 available units. In order to.
What about Dubai Marina? There are so many agents in Dubai Marina. What about Dubai Marina? How many listings? You advise.
I talk about driven here. We don't go into areas that are too fragmented and too crowded, let's say. So Dubai Marina is not our forte. But I would say if you're a good agent in Marina has about, if I'm not mistaken, 45 or 48,000 units. And if at any point in time 5% of these units are available in the market for rent or for sale, that's almost 2,500 units. Of 2,500 units, if Marina is the highest transacting, if you have 100 listings, you're doing a fantastic job. 80 or 100 listings in Dubai Marina, you're doing really well. Whether you are a broker or a brokerage, I think that's a good number in an area like Dubai Marina.
I would like to remind Sim, people who are watching, you can send me a private message. I'm not going to mention your name. It's fully confidential. I'll ask the question that you will text me to Abdullah. I already received some messages. Don't worry, this is 100% confidential. If even Abdullah will ask after Ahmed who asked me this question, I'm not going to say. So feel free to ask questions. Okay, Abdullah, thank you so much. Let's move to another question. What do you think, Abdullah? Is it a right time to invest now?
Personally, yes, I believe so. Now, this is a not. I don't like to call out buying or selling, or people should do what's in their best interest based on their current circumstances from an investment and cash flow perspective. But what I would say is if I'm sitting on a disposable income today, I would invest it in real estate, and I would put this in Dubai. And the reason is, as I mentioned earlier, we're sitting at multi-year lows. The interest rates are at multi-year lows. LTV is at multi-year highs, and at the same time, you see stocks going up, bonds going up, commodities, gold, everything has gone up, and you feel like you've missed that boat. But in real estate, that boat is still, you still didn't miss it. It's still there, and still. We didn't see that spike or that run up, and we don't know when we're going to see it. But there are very encouraging signs, including the interest rate, including the LTV, including the fact that developers literally stopped developing new master plans, so that restricted supply for the years to come. There's Expo as a strong catalyst coming up. So I think there are many reasons why you should make an investment decision rather than stay on the sidelines from a Dubai real estate perspective.
Abdullah, for example, let's say if I want to buy a property, I want to invest money, what do you think? Which properties I should purchase? Which properties I should buy?
I think you should be in an area that is fully developed. If you were not to take on too much risk, I would be in an area that is already fully developed or 90% developed. Areas like downtown Dubai, areas like City Walk, to other degrees, Dubai Marina, Blue Waters. These areas have very little risk of a downside risk, because there are no lands to develop and that will compete with you, or there is very little land to develop on that will be your competition. You're only competing with neighboring buildings and neighboring apartments that will be always limited in terms of its effect when they're in the market. So if there is a property in the market that is 10% lower than the intrinsic market value of that property, it will probably fly off the shelf very quickly. So it's not really competition. But if you are in an area like, I don't know, Dubai land, for example, where I think the 30% of the area is developed and 70% is still sitting as raw land, then this is yes, you're getting it cheap, you're getting a potentially higher yield, but at the same time, it's very speculative, because once these 70% of land is built, that's going to cannibalize your returns. That's going to cannibalize your investment thesis as a property owner, and you'll have much higher risk being in that area. However, again, with speculative investments, you could make higher returns, but it comes with greater risks as well. So if it was me investing, I would invest in areas where developers have an inherent interest in the area.
Which area, Mr. Abdullah? Just pick one area that you would invest.
I would do downtown Dubai is a natural. I think for one reason, I think Emaar is fully invested in this area. They still operate most of the hotel. Dubai Mall is I think about 75 or 80% of Emaar malls is the income from Dubai Mall. So they have an inherent interest to make this area very popular and have traffic in the area at all times. And for that, your interest is aligned with the master developer. In some areas, the master developer just builds and then they run. They build a master community, an area. They have nothing there. They don't have hotels. They don't have retail. They don't have anything that they're building. They run out of it. So in these cases, they don't have an interest in making this area popular and more in demand over time. So yeah, if I were to pick one area that has these factors all considered, I would say downtown as a natural.
Perfect. Now, Abdullah, for example, there is now this COVID-19, they're saying the flights will be opening. So what do you think? When this all COVID-19 will over? What do you think? When is it going to over?
Look, I really when you say when it will be over, there's two questions. One is when are we going to when is the world going to open? That's one part of the second part of the question is when a vaccine will be found and we'll all go back to normal life and no social distancing and no new measures and whatnot. I think only God knows some of these answers, but the way I see it, I think Dubai has done a fantastic job, and it's truly remarkable what they've done in terms of leading the world in terms of the number of tests, and that got them to recover, got the city, the country, the UAE, to recover much quicker than other countries, whether it's in the Middle East or even globally. What I can tell you for sure is once this is over, and nobody knows when, but once it is over, Dubai will be a destination that people will talk about across the globe. It's going to be a story that maybe we'll hear about in MBA schools and Harvard. They'll make a case study out of
Correct.
what Dubai has accomplished and how it accomplished what it did.
Correct. For example, in Russia, we have a lot of people who are now willing to come here as soon as it's possible because the way it was handled.
Absolutely.
Absolutely correct.
Yeah.
For example, for the next 1 to 3 years, what's your forecast regarding the real estate, Abdullah?
We have a saying, and where I come from in Saudi Arabia, we say sab'a jaf wa sab'a. Basically, what it means is the real estate are cycles of 7 years. So there are 7 bad years and 7 better years. So if you take on that saying, we're already in the 6th bad year. If you look at our peak was 2014, we're at 2020.
Yes.
The fact that 2021 coincides with Expo now, and it's the 7th year, makes me very excited about the real estate market. So I really think I'm very positive about the next 3 years. There are many reasons why I'm positive. One thing I didn't mention actually is that prices of assets now are very close to replacement value. So today, if, for example, you want to build a project in Business Bay, it's not feasible because if you calculate the price of the land versus your construction costs and your sales and marketing costs vis-a-vis the selling price, you will find that your selling price with your margin is actually significantly higher than the market price today. So it doesn't make sense for developers to develop. And that's why you see the likes of Damac and Ellington, for example, private developers, they haven't developed anything since 2018. Damac maybe did 1 project since early 2018, because it really doesn't make sense to develop projects because there is no margin, and the market price today, the replacement value is actually higher than the market price. So until prices go up and demand surges to a point where it makes sense to develop again, then developers will start going back into the development wagon. So I'm very confident about the next 3 years. The fact that there's very little supply on a new build coming in, the fact that we're we're below replacement cost today, interest rates, LTV, multi-year lows. There are many reasons that make me believe that the next 3 years will be very positive for real estate.
Is there any plan for expansion in the next couple of years?
Well, we continually expand. So we've as a group, we've opened offices in China in early 2019.
Nice.
Towards the end of 2019, we also opened an office in Riyadh in Saudi Arabia. Within Dubai, we already have branches in Jafza and JBR and Dubai Creek Harbor. So JVC, I mentioned Dubai Creek Harbor. We're opening in 1st of July. So
Inshallah, nice.
That's an exclusive. So we're ready to open our Dubai Creek Harbor location on July 1st. Dubai Hills is coming as well. So of course, expansions and areas of focus that we are that we like to be in is something that we continually look forward to.
Abdullah, just a question. When you say it in China, does it work in the way you send someone from UAE to China, or you employ people there? How it works when you open office in China?
We employ people. Our office is in Shenzhen in the south of China, just at the border in Hong Kong. So we employ people in China, and the way it works is it's our satellite office that offers advice and consultancy to Chinese investors looking to invest in Dubai. So what happens is we give them seminars, presentations, telling them about the investment opportunity in Dubai, versus what Chinese normally like. They in general, they like areas or cities like Bangkok in Thailand. They like Kuala Lumpur. They like now Greece. Athens is a new flavor. In the past, you look at Chinese behavior. They looked at Australia, Canada, the UK. These are not very popular to them today because of tax reasons. They started looking at other areas like, as I mentioned earlier, Thailand and Malaysia. And Greece as well. Now Dubai has become a focal point of Chinese investors and investments, and it's really literally the tip of the iceberg. I think once the Chinese know Dubai and what it can bring to the table in terms of returns and yields and starting prices per square foot compared to everywhere else in the world, you'll see a lot more coming, and that's why we wanted to take a first mover advantage into the Chinese market, and it's been doing fantastic. I mean, China has been one of our major success stories as an organization.
MashaAllah, nice. Abdullah, isn't it hard to control people, let's say your managers in China from UAE? You find any challenges controlling them, their performance?
Well, I don't control anybody to start with. So what I do is I have an amazing, really amazing leadership team that take off a lot of the burden off of me. Everyone is responsible for their direct lines, for their verticals. Some people manage several verticals and employ several managers that can help them with their respective tasks and KPIs. But what I spend most of my time in today and yesterday and tomorrow is finding these people. Finding these people.
Okay.
This is really what it's about. It's running an organization. It's about the people that you have, the talent that you employ, and what they bring to the table versus
Nice.
the competition and the industry.
Nice. Abdullah, now you're making, mashallah, a really great move, very inspirational, different offices, office abroad, driven, well-known, Abdullah, successful. Now, what do you think? What companies should be doing to stay profitable?
Well, I think I mentioned earlier, depth in any organization is very important. You need to
diversify, right?
You have to have a diversified income stream. You have to ensure you have the right people around you. So people are afraid, especially in our industry, are afraid to employ top talent and pay top dollar for that talent because some people feel that it could be expensive, or it could be tiresome, or it will affect your margins. But if you take a long-term approach, you look at the vision. If you have the right people behind you, honestly, that's what it's really about. It's not about. There is no secret recipe to have a successful organization. It's all about the people that you employ, how you empower them, how you give them the support that they require in order to perform their duties and tasks, and ensuring that they deliver on those. And sometimes talent is expensive, but you have to live with that. You have to continue to invest in that. And as I said, I spend most of my time just finding that talent and grooming the existing talent as well.
Where do you look for them?
I'll share with you separately and
privately.
And a separate room. Yeah.
Okay. Abdullah, what will be your company strategy during this COVID-19 situation? Literally every 100 companies out of 100 got suffered. So what will be your strategy to survive and to keep your business, to keep it growing?
I think I like to think about brilliant basics. So I always go back to basics when it comes to running an organization to stay strong and to survive any situation. When I say brilliant basics, I say we focus on our core. We continue to focus on our core and what we know best. We leverage our knowledge and relationships with key anchor clients and relationships, and deliver utmost value out of these relationships. We advise, we continually stay in touch with key stakeholders, and find, in these situations, you'll just magically find ways to monetize that you never thought of, and I think in this time, or in these situations, it's time to focus on your core, and to build on your core expertise, and ensure that you take up a stronger market share doing what you do best. And this market now is ripe for consolidation. You'll see a lot of consolidation in the market. I think 2 days ago we heard about a merger between two companies that work in one segment of the market. I think we'll see a lot more of that, and you'll see companies that have similar mindsets and similar or like-minded kind of approaches from an organizational perspective, tie up together and do more.
Perfect. Thank you so much. Okay, guys, let's now ask questions related to past of Mr. Abdullah, how he established Driven, and so on. Meantime, I'd like to remind that everyone, I receive now messages in private. Just as a reminder, you can send me questions in private, which I'll be asking Mr. Abdullah. Okay, Abdullah, about Driven, how did you establish it? When and how it happened?
It was a sheer coincidence. So in 2012. So I used to work in banking before. So I worked for a joint venture between Merchant Bridge and UBS, the Swiss bank. We worked in private equity. So we worked with several high net worth clients, advising them, and we did a few private equity opportunities in the Middle East, and bought and sold companies privately and publicly. One situation, one of our clients, just because he was a close client of mine, and I was very close to him, asked me and our company for advice on a purchase that he had done in Dubai in 2011, and that was a building in JBR. And he was like, I already bought a building in JBR, so I want you to tell me what to do now. 1 year later, I was like, you bought a building and you haven't done anything with it. So I started looking into that, and late 2011, early 2012, I've looked at the market. It was a time where the market was slowly starting to come back in terms of momentum. I started dealing with I think 3 or 4 brokerages at the time. Talking to them, asking them for advice, on the market, on prices, and what we can accomplish, what we can do. I started receiving offers, for the building to kind of rent as a full building, because that's what the client wanted. And then when I started receiving offers, I was like, okay, well, it sounds like there is a huge margin that these guys want to make. So it's maybe not feasible to do that. So I went back to my client. I told them, well, this is what the market is giving us. If this is the case, let's see, maybe I can do that. So I told them, let's create a small company. It's another company now, and we manage this building for you, and you have an inherent interest in this building, and I'll run it for you. And that was Marjan number 4 and JBR. And that's, and then I started interacting with brokers, with agencies. I saw that there was, a real need for professional service in the market, in the way that institutions do it, asset managers, banks and investment banks do it. And that really did not exist in the market, at least not then. So I was like, there's a huge gap. If this is the quality that we're receiving, if this is the kind of caliber that's there is a huge gap, and I think there's an opportunity at the same time. And 6 months later, Driven was born. That's the story. Nice. Yeah.
So for example, first you formed one company that was a management company. Then after this, you made a brokerage company, Driven.
Correct. Yes.
And in UBS, what was your position? You were a general manager, or?
So I escalated from an associate to an executive director. By the time I left the fund, I was a managing director, 1 out of 6 in Dubai. So I used to work, I worked at the wealth management team in London and then the investment banking team in Dubai. By the time I left, I think it's about three or 4 months before I left, I was managing director at UBS.
Nice. And but don't you think it was a certain
And
risk to
banking, it
leave to
doesn't work
UBS?
in banking, it doesn't work like real estate where there's one managing director. There's quite a
No,
few
different. Okay.
for each arm.
So kind of competition maybe, right?
Exactly. Yeah.
Okay. Don't you think it was a certain risk to leave UBS with your stable income? I'm sure you had a good salary and then start something your own.
At the time, look, well, my responsibility at UBS was running the Merchant Bridge UBS fund, which was at the time close to being kind of exited. There was also another situation that kind of triggered that, where two of my partner at the Merchant Bridge level passed away in a plane crash in 2011. It's basically the funds, a private plane flying out of Iraq while we were actually finalizing an exit of the largest telecom operator in Iraq, Asiacell. Two of my partners were on that plane. Two of JP Morgan executives were on the plane as well, and they were advising on the sale on the Asiacell side. And that also, obviously, with that particular transaction being the biggest on our balance sheet at the time as a fund, and we eventually exited in 2012 when we sold to QTEL, which is now Ooredoo. And with that in mind, I still till date sit on some of the investment vehicles that are still running for the fund. We still have a cement plant in Iraq. We still have an automatic doors manufacturing company in Riyadh in Saudi Arabia, and I still sit on these boards from a non-executive level. But from a fund operational level, it was the fact that we had already exited the majority of our investments made sense for me to think about establishing my own thing. And being in Dubai during that time, and being, not everyone that comes to Dubai will naturally be exposed to real estate in some way. Even if you can't come as a chef, you will, I think you will like it. Or maybe it was just me, but I came in as a banker, and then a few years later, I fall in love with real estate, and I started.
Have you ever regret about your decision?
Absolutely not. I love what I'm doing now. I love real estate, and in fact, what I like is that I'm doing a bit of what I used to do while I'm doing real estate. So we're doing a lot of real estate private equity now, whereby we structure transactions, we work with developers, we structure investment kind of structures that.
And how you got the job in UBS?
So I worked well, career-wise. I started at Saudi Aramco back in 2003. They actually sponsored my education in the US, so I had to go back and work for them for the same number of years that they sponsored me for. Three and a half years later, I joined Samba in Saudi Arabia, the Saudi American Bank, which is the Saudi Citibank at the time. Then Citibank sold their stake to the Saudi partner. So I worked at Samba for about a year and a half. And then one of the board members at Samba was also a board member, or actually the chairman of the Merchant Bridge UBS fund that was focused on the region. And he told me, there's an opportunity here we're opening our premises in Dubai. I want you to meet the guys in London. I met the guys in London. I liked what I heard. It was a newly established fund. And the story was good. What they've been doing is exactly what I wanted to do at the time, which is private equity and doing deals on the private market. Told me about the transactions that they've already been working on, like the Asiacell transaction, like a cement plant in Iraq. We had plastic pipes, PVC manufacturer in Saudi Arabia. We were invested in Orascom in Egypt. We were one of the early investors in Orascom in Egypt. Investments in Morocco. So I liked the portfolio. I liked what they were doing, and I thought maybe I'll add some value there, and it's a new experience. So I jumped ship and I met the guys in London. They said, okay, you'll be responsible for the region. It coincided with when UBS opened their offices in Dubai as well. So it was a good experience.
Now, what was the key factor of success of Driven? You established the company, you have got the property under management. What made it you to have a huge office on Bay Square and a successful running company? What made it successful?
There's only one answer to that, to be honest, and it's the only answer, and it's people. Honestly, this is I can't. This is a people's business. If you look at management consultants like Baker McKinsey, or like McKinsey and Co. Sorry, Baker McKinsey is a lawyer. You look at Booz Allen, you look at BCG. On the legal side, you look at King & Spalding, you look at Allen & Overy. Why are these firms very successful? Because they have the best lawyers, they have the best management consultants in the world, and they are able to attract the best of the best of the best that are Harvard grads, UPenn grads, Stanford people, and they're able, because of that culture that they created of being surrounded with like-minded people that are very talented, very hardworking, and they're just smarter than your average individual in the market. So
one question.
Yeah.
Sorry, Mr. Abdullah.
This is literally
okay. For example, let's say the new company that recently got established, how they can attract someone, let's say like Harvard grad, what you can say, how they can attract good people, a new company.
It's not easy. I mean, look, it's really not easy. These are things that you'll learn from. You're trying to ask your previous question differently. Very smart. But it really happens. Look, a lot of the people that we recruited, we interact with them in the course of business, and we see that they're either undervalued at their own organizations. They're not put into the right kind of sphere of influence within their organizations, and it's talent that needs to be groomed. And I think if they are in an environment where they can feel that they can learn from you and be better around you and around the people that are working with you, then there is no reason why they would not want to be part of your organization. This is, as I said, why people go to King & Spalding or Allen & Overy if you're a lawyer, and if you're a management consultant going to Booz Allen, or A.T. Kearney. You need to be, you need to understand that the people that are there in these organizations are really good people. They're people that are smart, that you will learn from, and that you can grow because of that. And if they know that, and that's not easy. Obviously, you'll have to establish that brand. You have to establish that culture, and it takes time. It takes time and effort.
Abdullah, what were the mistakes that you have done in business?
I think sometimes you tend to pivot from, I talked earlier about the brilliant basics and sticking to your core. Sometimes you pivot from your core and start looking at areas that maybe you can't add value to. For example, today, if I want to be a as a company, we want to be specialists in the Dubai Marina or Palm Jumeirah, I can try that, but I know that it's going to be a very difficult job, and it's not going to be easy. And it's 2 years later, I will say, okay, this was a mistake. And there are some mistakes that have been done in the past that are in that domain. So I think sticking to our core, establishing market share in your core areas and in your core knowledge, and not pivoting to sticking to what you know, and not pivoting to what you don't know, or what is already deemed competitive. I think these are mistakes I learned from. So rather than establishing many new verticals, it's more about empowering existing strong verticals to be stronger than they are and bigger than they already are.
So is there anything that you would do differently if you could go back?
Yeah, look.
Let's say now let's say Mr. Abdullah, who's very successful, who has got a lot of experience in real estate, and everyone knows him. If you will go back 10 years ago, what you would advise to Abdullah, who is 10 years younger?
Well, that's a good question. Look, I would not honestly speaking, if I did anything differently, I don't know if I'm going to be standing in front of you today and talking to you, but I believe that a lot of the things that we did wrong and we've learned from. Every success story comes from a failure. So we you know, I can give you a number of examples of where we failed miserably and then changed course and learned from it and did better. But this is not one thing. These are several things. But in a nutshell, what I would have done from the start is the ecosystem that we currently have in terms of technology and ensuring that it all caters to our own business rules. I would have created it back in 2012 rather than it being a work in progress as we go, because as you grow your business needs change, and if you have an infrastructure that can support growth from the beginning, that it would be a much easier journey for you. Thankfully, we're already now done with that, so we can sustain any growth. If we were to employ 300 brokers tomorrow, we have an infrastructure that's ready for that. But generally speaking, I think investing in tech early on would have been the solution.
Nice. Okay, so Mr. Abdullah, let me read now some questions that I have got, people waiting. Okay, with the current market situation, what do you think? Is it the market to buy a property in Dubai? So it's a long question. Another one.
We've already alluded to that. Again, if it was a personal choice, I would jump onto the property bandwagon today. I would make an investment decision. Obviously for the right property. We also discussed, where is some locations that you're kind of safer to invest in and with little downside. These are the locations I would invest in today.
The question continues: home or investment? So you should invest as an end user or investment?
I think both. I mean, as an end user, there is no better time to buy because LTV is high and the interest rates are, it's very difficult for USD denominated currencies to go below 0% interest rates, which is where we are today. I think a negative interest policy is not in the cards, and the Fed made it very clear that this is the case. On the basis of that, we are actually sitting on an all-time low in terms of interest rates, and there is no lower than that. So as an end user, there is no better time, basically, because of the price and because of all the other incentives, the market incentives that we have. It's really the same thing for an investor today. If you're sitting at multi-year lows, there is a catalyst of Expo coming up. The fact that there is no new supply or new build. There's very little off-plan activity. The prices are near replacement value. There are a few reasons why I would invest and I would buy my home today rather than rent.
Okay. You both mentioned it's a good time for investment. What is the average return back nowadays for the investors, considering the drop in the rent value?
So
people
generally rental values, if you look at, we've looked at the correlation between the rental values and sales values over the last years, 2014, and they drop almost in tandem. So, rentals, if they dropped, let's say, by 1/3 between 2014 and 2020, sales have dropped by, plus or minus the same level. So the yields really have not changed massively today. So you'll get yields of upwards of 4 or 5% in prime areas like DIFC, downtown or City Walk, Blue Waters. you'll get returns of upwards of 6 or 6.5% in areas like JVC, and you'll get returns upwards of 8% in areas like Dubai Land, maybe even International City. So it depends on the risk you're willing to take. Personally, I take calculated risk, so I'll take lower yield, knowing that I have less competition in that area.
Mm-hmm. By the way, about this, would like to say a few words. Abdullah, imagine there was one studio for sale, which the selling price was 230,000 dirhams. And this studio is rented for 30,000 dirhams, one check. And it is not international city.
Okay, that's 13%.
So
yeah, I mean, the opportunities are there. You'll find them. But again, when will that studio get vacant? Are you going to rent it for 30,000 again? Is it easy to rent? These are the questions I think you need to.
Yes, correct. Correct. Abdullah, how much you're paying commissions to brokers?
Well, it ranges. So we pay anywhere between 50. Well, it starts at 50% of commission income. It goes up to 70% depending on everyone's monthly performance. So we have a step structure to how
slabs maybe
slabs and how we compensate brokers. So it's really, the more you make and the more you perform in any given month. It doesn't have to be one transaction, even if it's several transactions. It doesn't have to be sale or rental, even if it's sales or rentals. So any income brought on a monthly basis, this is the kind of number that you're looking at.
Is Driven Properties is hiring? This is another question. Is Driven Properties is hiring? If so, how to apply? You're getting human resources. You're getting human.
I spoke to you earlier about talent and certainly.
So some people wants to join you now.
With pleasure. I mean, with the right talent and with the right mentality and mindset. Driven Properties is always hiring, is always on the lookout for the right talent and the right people.
The second part of this question, very important. Where to apply?
HR. So you can send an email to info@drivenproperties.ae. It'll go straight to HR, and depending on
some CV.
Sure, yeah, okay. And you can apply through the website as well. There is a contact us section that would.
I think the same. Same person. What I need to do to pass the interview? Person is asking what someone need to do in order to pass your interview. And by the way, is it tough?
Well, it's not tough. The interview process is quite simple actually, and it's mainly geared towards understanding you as a person and how you act in certain situations, rather than what you're experienced in or what you do best. Some of our top brokers had interior design background, or they were doctors or teachers. So it really is dependent on your personality, how much you want it, and how much how hungry you are for success. If you speak the same language as Driven, then you're welcome. We're always open for top talent.
Mm-hmm. I have got one message on LinkedIn, Abdullah. I need to ask, but you have a right to reserve and not to say anything. So there are some commercial secrets and so on. How much Driven is spending on marketing?
If marketing is a very subjective matter, because you have things like property portals. Do you consider that marketing?
I got one more question. Portals.
Okay.
I didn't read it yet.
so marketing in general, if you include portal, we spend upwards of 600,000 to 700,000, I would say, per month between portals and advertising online. So that's kind of a rough figure that I know from the monthly marketing reports that I receive.
Mm-hmm. The question from on behalf of Dubai Land Department and DREI, Real Estate Institute, what would you advise, Abdullah, to Dubai Land Department to make it better, to make real estate better?
Uh, I think there is a short list that we've sent to His Excellency Mr. Marwan recently, but that's more RERA than the Land Department. But I think stimulus in the market is very much needed. If we are in a position where we can you know, there was speculation. Maybe Ahmed, you can tell the audience because you know better, but there was speculation about reducing transfer fees and you know for first-time buyers or something like that. I don't know if that's something that is being considered. It's on the table. It's off the table. But that will certainly provide stimulus to the market. You know, that we're already seeing amazing signs or very encouraging signs in terms of market movement. Doing something like this, I think, will be the tip of the iceberg, and that will create a new level, I think, of market movement. So that's one thing I would certainly advise. I think the things like you've already been working on classification of brokers and whatnot. I think there's what I would certainly suggest actually is public-private partnerships. I think there's a lot that you can learn from several brokers in the market that can add value to the Dubai Land Department and RERA. This doesn't exist today, so there is no public-private partnership whereby you know the brokerage community and the Dubai Land Department and RERA talk, you know, openly and open sessions.
Nice, good idea. There have been some brainstorms, but it will be revived, and I hope you will attend.
Absolutely, with pleasure. Yeah, I think this is very important, and there, you know, legislation and ensuring that there are better market practices and I think wisdom of the crowd is very important, and you have you know tens of people that are in the market that are 10 times smarter than me or anyone else in this organization that can add a lot of value to DREI and the Dubai Land Department.
Ms. Abdullah, one more question from the chat. How many kids do you have? You mentioned your son.
I have 3 kids. They're all boys. I have Ahmed, Yusuf, and Saud.
Nice.
I have Ahmed is 8. Yusuf is turning 7, and we're in exactly 1 month. And then I have Saud, who turned 7 months yesterday. So
7, mashallah, mashallah. Nice, very nice. May Allah bless them.
Baby. Yeah.
Abdullah, we know you're very, very busy. Unfortunately, guys, I can't ask all of these questions. Abdullah, it's 2 p.m. now. So from 1 to 2, we won't take much of your time. So with the remaining questions, I don't know what is the best we can do it.
Just email me, Ahmed. I'm happy to answer your questions directly. Email me with all the questions. I'll send you answers. Feel free to share them with the audience.
Fine. So we will, on social media, then I will try to share these questions. Thank you so much, Abdullah. Thank you very much. Thank you for your time. Thanks a lot. Your email is asking in chat.
Sure. If you want to share it, I think you have my email.
Okay, I'll share it. I'll share Abdullah's email. Not phone number, of course, only email. So, and HR info at
actually, I'm more responsive on email than phone number anyway.
Than phone, okay. Okay, perfect. Abdullah, thank you so much for your time. I wish everyone a very productive day ahead. Thank you so much, Abdullah. Stay safe.
Much appreciated. Thank you.
Thank you very much. Bye.